Welcome in. My name is Arya and I'm a research analyst at FinChat. And in today's video, we're going to be looking at the sort of DCF feature that we have on our website, primarily used for financial modeling of the stocks that you're looking at. And admittedly, this is one of the features that is a little bit more intimidating when you come across it, but hopefully this video will kind of shed some light on some of the best practices with our modeling tool and save you a lot of time, particularly if you're already doing this on spreadsheets. So without further ado, the first thing you're going to want to do is navigate over to the finchat.io website. For the sake of today's demonstration, we're just going to pull up Amazon for now. And so once you pull up Amazon, you're going to notice that you'll end up in the analysis tab. From there, what you're going to want to do is from the top, select modeling. And once you've done that, you're now able to project out the financials of Amazon. And before we get started, what I'm going to do is I'm going to actually toggle on the dark mode, just so it's a little bit easier to kind of see the numbers. From the top, you have a couple different options here. Of course, you have the ability to change around the number of decimals that are visible. You could change the figures to be in thousands, millions, or billions. And then additionally, you could choose between unlevered or levered. The big difference between these two is that if you're on unlevered, you're of course dealing with operating income and the corresponding financials that come with operating income. And then if you're dealing with levered, it's with net income. And eventually it leads to levered free cash flow at the bottom. Two more handy features is you could also reverse the dates. So if you prefer the final year to be on the left-hand side of the screen, you could just click that button. It's a neat little feature that is also in other parts of our platform. And then additionally, if you'd like to quickly reset the data, you could also click on that. Now, with that being said, in terms of the actual numbers, we're sourcing 3 years of analyst expectations as the defaulted data that is populated in your DCFs. One thing to note, we're using the third year of that. So in this case, it would be 2027 as the sort of end state net margin or CapEx figure or whatever the case may be. The only one that isn't pre-populated would be the 4th and 5th year revenue percent changes. And so actually, if you don't edit these, it would just recognize that as a 0. I'm going to put these to 10% for now. And you'll notice that assuming that Amazon has this growth profile over the next 5 years, they're going to reach $1 trillion of revenue by the year 2029. And so with our DCF tool, we actually give you a lot of sort of customizability with the amount of financials which you could project out. So just to name a few, of course, you have your revenue, your net margins, and consequently your net income margins, depreciation and amortization as a percentage of revenue, or I guess in this case, it would be a ratio, so on and so forth. Towards the bottom, we also allow you to decide the cost of debt, the tax rate. Consequently, you can calculate the after-tax cost of debt. And then additionally, you're more than welcome to put in your risk-free rate and the market risk premium. And then all the way at the bottom, you're actually able to choose to be a perpetuity model or a multiples model. So in this case, assuming these numbers come into fruition with Amazon, we can then apply for example, a 20 times exit PE multiple in the year 2029. And based off that, it seems that Amazon actually has about 50% downside over the next 5 years. Now, one thing to note with this is that depending on all the assumptions that you have baked into your DCF, as with every DCF, your end result could vary massively. So for example, here as a default, we have the risk-free rate at 4.06%. For example, if you were to put that down to a 2% risk-free rate, you were to bring the market risk down to 4%, get a little bit more aggressive with the net margins, and then finally have our exit multiple closer to where Amazon is today, you'll see that our implied upside or downside has actually changed from negative 60% to positive 8% by just making a handful of different changes. And again, let's just say we want to drop this down to 25 times multiple. You'll see that Amazon has 20% downside, right? So just like any other DCF, depending on the sort of assumptions that you bake into your DCF and your modeling, your end result could vary greatly. With that being said, if you have any other questions, you're more than welcome to reach out to us through our help center, which can be found under the settings icon in the bottom left-hand side of your screen. Thank you for watching and have a great day.